Do you ever feel like the market is always playing tricks on your mind? Whenever you buy, the market always goes down. Whenever you sell, the market always goes up. In today's episode, we are going to be talking about the best trend trading strategies. In order for you to always do the right thing, we are going to be looking at the triple screen trading system, because this system is very powerful and you guys are going to turn out to be very profitable. What's up, everybody? I go by the name of Muna, aka Beyond 10X, and you guys already know exactly what we do. All you gotta do is watch the video till the very end, because I'm just going to be showing you every little bit of secrets that I know, especially when it comes to trading multi-frame time intervals, because it's very important for you guys to have like the perfect trading strategy in terms of looking at the very long range, the mid range, and the short range in terms of planning for your trades. Because when it comes to trading, right, you have to always make sure that you are in sync with what's happening, especially when it comes to the time frame. Are your trades in sync with the weekly, with the daily, and with the 4 hourly? So in today's episode, we are going to be breaking down everything one step at a time so that you guys can actually turn out to be very profitable. I have a little bit of a presentation for you, so I hope you guys are going to be jotting down a few points here and there. So obviously we are going to be talking about trend trading strategies using the triple screen trading method. So obviously there's a few mistakes that a lot of traders usually make. For example, going against the trend. This usually happens when, for example, you buy, the market does the opposite of whatever you do. That's because you are lacking the foresight and you don't really know exactly where the trend is coming from and where it's going. So neglecting the significance of the higher time frame in comparison to the smaller time frame. So usually a lot of traders just have like a very short-term sort of vision. So this is why they get caught up doing the opposite thing, because they are just looking at the smaller time frame. They don't really know exactly what's really going to happen in the near future, and not knowing what signs to look for in order to validate a trade. Sometimes a lot of traders don't really know why they are even placing a particular trade. They are just simply relying on what the media is talking about, what a lot of gurus are talking about. They don't really have like enough conviction to validate a trade. Like, for example, before you even think of buying anything, you have to make sure that all the boxes tick. Why are you buying, or rather why are you placing that particular trade? Do you have enough validation? Did you check everything? Did you double check everything? So you have to always make sure that you have a lot of validity before you actually place a trade, because if you think about that, right, you are obviously going to be thinking twice before you actually place a trade. So make sure you have enough validation. Do all your trading indicators align with whatever trading or rather trade you're going to do? Are all the indicators in sync with your trading decision? In order for you to solve these problems, right, we are going to be applying a very simple yet effective method, which is called the triple screen trading system. So basically, a triple screen trading system is essentially a trend following system. This trading strategy works by analyzing charts at multiple time frames. For example, when it comes to trading, right, you've got different time frames. You've got yearly, monthly, weekly, daily, and hourly. So if you look at those multiple time frames, right, in order for you to have the best successful trades, right, you always have to make sure that all these time frames are in sync with regards to your trading strategy. The triple screen trading method tries to time trade entries to coincide with the market corrections or pullbacks. This can happen in both bull trends and bear trends. So the triple screen trading system is very reliable and very helpful in both bear and bull trends. So it doesn't really matter. Whenever you guys are going to be implementing this triple screen trading system, right, you are most likely going to be able to like benefit, and you are going to be way more profitable. When it comes to the triple screen, right, the reason it's called the triple screen is because we are following 3 types of time frames. Okay, for example, different time frames are subdivided into 3 parts. Whenever you are trading, right, you have to have an overview, you have to have a plan, whether you're going to be looking at the long term, the mid term, or the short term. For example, when we're talking about the long term, right? When you are a trader and you are long term sort of placing a trade, you have to look at the weekly, the daily, and the 4 hourly. We can also talk about, you know, the yearly, the monthly, or the weekly. So whenever you are trading, you always have to have 3 time frames in mind, okay? And these 3 different time frames have to synchronize with the type of trade that you are supposed to do, because if you follow these different three time frames, right? Obviously starting with the highest, going down to the lowest, right? Your trades are going to be in sync with the general trend. These are the entry rules for the triple screen, okay? For example, let's say the strategic chart, which is the highest time frame, right? Let's say that it was in an uptrend. The market was going up, right? So that means the general trend is bullish, right? So if the strategic chart is actually up, right, you have to wait for the tactical chart to be down, and the executioner chart should be showing you some bullish signs. And then whenever these market conditions are aligned up like this, you have to go long, okay? So in order for you to buy in a bullish market, when the weekly is showing bullish symptoms, all you got to do is wait for the tactical chart to be a little bit down, right? And then the executioner chart should be showing you bullish symptoms, and then you're going to be able to like go long, okay? So for example here, weekly should be up, tactical, which is the daily, should be down, the executioner, which is the 4 hourly, should be up. And then if all those, you know, things align in that particular order, right, then you are going to be able to go long. And if you do this, you are going to be trading with the trend. Guys, I really hope that you understand the difference between the different you know, time frames when it comes to trading, and the most important role that these different time frames play when it comes to us executing our trades. So the very reason why the market is always doing the opposite of whatever trade you place is because you are simply trading in an out of sync market environment. So this is the blueprint to being successful and obviously getting to trade with the trend. Now that you understand those different rules, right, all you gotta do is use some sort of indicators, because these are going to be your tools and they are going to help you highlight the different things that are happening in the market. Let's look at a practical example right about now, and I hope that you guys are going to be very you know, in sync with what we are doing. And remember, we are supposed to be looking at these rules while placing our trades. Of course, we are going to be looking at our favorite digital asset, aka Bitcoin, and just simply looking at this particular market structure, right? We have been producing lower highs and we have producing lower lows. We have been producing lower lows. So this is obviously in a blatant down trend. So what we're supposed to do is we're supposed to be shorting the market. So in order for us to short the market, right, we are supposed to use the strategic chart, which has to be in a very good blatant downtrend. Our tactical chart should be in an upward sort of moving market, and then our executioner chart should be down. If we look at what has been happening in the past few days, right, Bitcoin has been having a very good drastic and very dramatic rise, which is very, very important. So according to this triple screen entry, right, we are supposed to be shorting when we are having a very good upwards momentum on the daily. Remember the rules, right? We are obviously going to be looking at the weekly, the daily, and the 4 hourly. Okay, so the daily is showing us very good upward momentum. That ticks our box, right? So now let's look at the 4 hourly, because the 4 hourly happens to be our executioner screen, because it is giving us very good conviction, very good validation, and we have to make sure that the 4 hourly has to be like giving us bearish symptoms in terms of the different trading indicators. So for example, the RSI, which is an oscillator, should be giving us some sort of bearish divergence. It should be coming from an area of being overbought to an area of being oversold. So we are supposed to be shorting when the prices are extremely high, and we are having this particular downturn in terms of the trading indicator. So I hope that really makes sense. If we take a look at the 4 hourly, right, the market is losing quite a whole lot of momentum. And if we take a look at the different indicators that I have, right, by the way, this is the RSI. I'm sure you guys can actually get to see this. So if we take a look at the RSI, it is having some sort of bearish symptoms right over here. And then let's just flip over to the few hours, right over here. I'm sure we are going to be observing that it actually produced some sort of bearish divergence right around this area. Okay, so just getting to break down the 4 hourly and just looking at the different smaller time frames is going to show you some more important details, and then you're just going to be able to move from there. So getting to look at the 4 hourly, right, we are seeing the RSI coming from an area of being sort of overbought, and it's beginning to have a downward sort of turn to the downside. So that is going to be very, very good for us. So in order for us to take advantage of this market situation right over here, all we got to do is wait for the perfect market situation. Obviously, it's very important for us to at least get to short the market, right, when the price is at least closer to the rejection area. Okay, of course you can obviously get to short right over here, right, but we're going to end up having a situation where the price goes up a little bit higher and then it just continues going down. So I really love squeezing all the little bit of profit that I can from any particular trade. So in this particular case, right, best believe we are going to experience some sort of market situation where the price of Bitcoin is going to end up trying to sort of break the resistance. So according to this, we are in sync with the triple screen entry rules and just basically the triple screen trading methodology, because everything ticks up. We are having a downward momentum on the weekly, the daily is actually up, and then the executional is down because we are having bearish symptoms on the 4 hourly, which actually happens to be our executional chart. So if you were supposed to short Bitcoin at this particular time, right, you are obviously going to end up doing very well. If we take a look at this area, right, when the price was actually coming from an overbought or rather an oversold area, this was starting to turn out to be very bullish, and then the price just simply skyrocketed. Going back to our triple trading system, right, so in this particular case we found out that we were having some sort of higher highs, and the market was turning from a bearish scenario all the way to a bullish scenario, and the EMAs actually validated this scenario because we were trading significantly above the 20 weekly exponential moving average. So we were definitely going into a very bullish upward momentum. So in this particular case, right, in order for us to go long, right, we have to make sure that our strategic chart has to be up and our tactical chart has to be down, and then our executional chart has to be up as well. So that's the only those are the only market conditions where we are supposed to go long. So in order for us to have had gone long, right, we could have waited for the market to have some sort of downward momentum on the daily, because remember the daily was having some sort of downward momentum. So we could have actually done this right around these areas. Let me just do that. Okay, so we were supposed to wait for the market to actually give us enough validation during this particular range right over here. So let's look at what was happening. I don't really know whether you guys are able to see this. Okay, this was a perfect buying scenario right around this area. Do you see this? Okay, so if we take a look at other trading indicators, right, let's look at the RSI. According to the RSI, we were in a very blatant oversold region right over here, and then we had some sort of bullish divergence. And if you guys don't really know exactly what bullish and bearish divergences are, please take a look at this particular video right over here, because we did talk about this yesterday. So if you take a look at this, right, the market is obviously producing a very good bullish divergence right over here. And if we take a look at the RSI, right, we are in an oversold area. So that really means that we no longer have enough selling power coming in from the bears. So that's the RSI. The RSI is giving us very good bullish upward momentum. So the RSI, which is on the 4 hourly, is showing us a very good upward momentum on the 4 hourly, which happens to be our executional chart. So the weekly is up, the daily is down, the 4 hourly is up. So that gives us enough conviction, enough validation in order for us to go long. And indeed, if you had to go long, you would have actually ended up making quite a whole lot of money. And it's very important to always have validation. Always wait for validation. Always make sure that all the time frames align with your purpose. Okay, so you wouldn't have even bothered getting in early, because maybe that could have been like a false alarm, and then the price would have ended up going down. So this is one of the reasons why you do not rush. You wait for the market to give you enough validation, and only jump into a particular trade when you have enough reasons to do so, because you do not want to be ending up with a whole lot of losses. So this is one of the reasons why having enough validation is very important. And just look at this. If you had to buy around this area, you could have ended up making very good amount of profit without even being stressed, without even being nervous about all your trades. So it's very important to always practice using the triple screen trading system, because it's always going to align you with the best particular trade setup when it comes to a particular trend. Okay, so always try to always have the triple screen trading methodology in your head before you ever place a trade, because that is really going to end up giving you a whole lot of profit. So this is about it for today. I really hope that you guys enjoyed it. I go by the name of Mona. All you gotta do is smash the like button in case you ended up learning a few things, and please let me know what have been your worst trading nightmares, and why do you think you always never align with the trend. So I really want to find out all those little details from you. All you gotta do is drop me a comment in the comment section below in case you've got any other particular topics that you would like me to talk about, because this is what I basically do. All you gotta do is drop them in the comment section below.